All right, boom. Let's get right to it. Hopefully, everybody's feeling well. Happy Monday to everybody. Let's go ahead and jump right into this thing. It's 6:30 in the morning, and we're just going to go ahead and get this thing live. So, hopefully, everybody is feeling really good today. And it's another great day, another opportunity for us to go ahead and really win. So, a few things to go over, cover, talk about. Hopefully, everybody has their notebooks and pens out, and we're just going to jump right into it. So, we did have the futures that held their gains overnight. We'll see how that works when the market opens up. A few tickers making all-time highs. One in particular, we do have ticker MU, which is making all-time highs. So a couple of things that I want to go over is some of the earnings for the week, some of the things that the Federal Reserve, um, has on their plate. We have some of those Federal Reserve people coming out speaking. So it's a lot of things that we're going to go over and really provide some insight. If you missed previous classes, you can catch up at your best convenience for yourself. So let me go ahead and share my screen, make sure this AI is on. There we go. We are recording. We are live. Boom. We got all of that. So top of the morning to everybody. Those that's just coming in, appreciate y'all for being in attendance. Let's get to it. It's 6:30. Like I said before, I'm just motivated more than ever. That's one thing about me. Don't put a battery in my back because now it's about to go down. Let's talk real quick, right? So let's talk MU, right? Let's talk NVIDIA, right? Let's talk these levels and these numbers. Like I said yesterday, when they pertain to NVIDIA, what you would need to pay attention to is this breakout of this falling wedge. I want to redo this again just to show everybody pretty much crystal clear where we're at. So NVIDIA is breaking out of this falling wedge pattern that it created by dropping all the way to 180 bucks right here on this 4-hour time frame. You can see that clearly, as well as here on this daily time frame. You can see that now. NVIDIA reports earnings on when 11/19. You should know that, right? You should know when your stocks are reporting earnings. It tells you right there on Yahoo Finance. I see that some people is just not using Yahoo Finance because I could just tell. If you don't know where to get EPS from, I'm sorry. It's right here, trailing 12 months, 1.59 for Palo Alto Network. But let's talk NVIDIA real quick, right? Because everything is right in front of you, right? That's sitting here. And follow along. Follow along. If you want access to get on this Zoom, you get into this program. If not, you're going to sit there and you're going to listen to me and what I got to say. So all these damn questions you got, you can get inside this program. It's 6:30 in the morning. Come outwork me. Come get busy on this Zoom. Because all of this, all of that, you go to somebody else's live. Oh, right. They ain't live at 6:30 in the morning because they don't fucking teach. Let's get to work. Let's get to work. Let's get to work. Let's get to work. Because now I'm motivated. NVIDIA, let's go. So now let's break this down. $3.52 EPS, 194. Let's talk these levels and these numbers. $4.5 trillion. $4.5 trillion company. Let's talk it. Let's get active. Let's talk these falling wedges. Let's talk this reverse on this market. Because all I heard last week was, oh my gosh, market coming down. And I told people, be patient, be ready for this thing to turn around. When it U-turns around, don't be sitting on the sidelines. When it U-turns around, make sure you hear on Zoom. And I told people that verbatim. So now when we talk here, let's go ahead and look at NVIDIA. Let's go ahead and look at NVIDIA. 3.52 EPS, 1-year estimate target of 229. Let's talk numbers and stats. Let's go to statistics. How much float size they got to move? Well, we know they got about 24 billion. 24 billion that they got to move. 24.35, right? 24.35. That's what they got in outstanding shares to move. Now, it's a company with $56 billion of cash, $10 billion of debt. So this is a company that's fundamentally sound. Push come to shove, they got to weather a storm. They got the cash to do so. So they could have a few rough quarters and still just be A-okay. They'd still just be A-okay. And so now what I want everyone to focus on is this, right? So with NVIDIA, we understand that it is the market. So if NVIDIA is the market, we can only be taken to the upside by NVIDIA. How do we understand that? When we come to the holdings, right? So you got an 8% allocation, 1% more than Apple, 1.5% more than Microsoft, and also double of what Amazon is. So just put that into perspective. NVIDIA accounts for double what Amazon is. So with ticker NVDA, what is likely when you come here to their earnings on the 19th? So what I'll say to people is just this, right? You got to just listen to it, right? You got to hear it. You got to hear it, take notes on it. You got to listen to it. Because with NVIDIA, because it is the market, NVIDIA now, is it likely that NVIDIA has major moves off earnings? No, not the way comparable, which we used to see $100 runs, which accounted for 10 to 15% type moves that we used to see on NVIDIA. Now, is this a stock that's just perfectly priced? No, this is a stock that may be a bit overran here in the short run. This is a stock that is a bit overran in the short run. So I'm going to tell you guys here now, when we look here at this larger time frame, we have to identify and take a look at what are these strategic levels that are here for ticker NVDA. I want you to pay attention. So with NVDA, you do have 203, right? So 203 and then 212, right? 203 and 212. Those are going to be your bigger macro levels that NVIDIA needs to get back above. Now, the situation with NVIDIA is this. If we break and lose 180, I want you to put this down. If we break and let's say we reject here at 195 and then we break back down, I want us to take a look at a couple of things here. If we break back down, get below 180, you're going to drop to about 174. And then after that, if we get below that 180 and drop towards 174, 169. In a worst case scenario, right? This market comes down more. Where would be ideally the point that you will try to get NVIDIA, right? Where would be a price that will just make all the sense in the world? So we play around with a few numbers here. This is how you can play around with your valuations to understand as to what prices you should be looking to buy. So if I know that NVIDIA's earned $3.52 EPS, now I'm going to play around with a couple numbers. I'm going to say, okay, well, let me try 130. Let me see what 130 divided by 3.52 is. That'll bring me to about 36. So a 36, what does that 36 represent? That represents now a 36 P to E trailing 12. So now let me go ahead and start, okay, well, I tried 130. Well, let me try 110. So 110 and I divide that by 352. That gives me about a 31. So I took $20 off. So ideally, a ideal price, right, where you would be getting the best fair value would be roughly around $110. 110 bucks would ideally be a pretty decent and favorable price. Now, this just brings us back to when NVIDIA did drop in April. In April, it ended up finding its bottom. But this is why these asset prices didn't stay here for that long. So when drops happen in the market and companies, the stock price not only drops, but also the value of the company may increase, because if the stock price is dropping, but the P to E, the price to earnings, is decreasing, that's becoming a more valuable ticker. So in this case, now you understand that until NVIDIA is at $110, there's really not a fair price that you're paying. So now you understand the situation and the setup here, right? Not to say that NVIDIA is going to go right back down, but from the perspective of now, push come to shove, if NVIDIA starts to get cooked, what areas and levels do investors say, I probably won't pass it up at these points in these areas? And that's why a stock like NVIDIA, which is, of course, heavily garnered after, heavily wanted, you want to be able to pick up, those names at those requisite levels. This is why names like TSM, right? Let's talk numbers and facts with Taiwan Semiconductor. How long did TSM stay at 130 bucks, $140? Not too long. Why? Because the stock dropped from 226 and came back down here to 134. Well, let's do some fundamental homework and research. Let's do a soft, because this is not even a deep dive. We're going to do some deep dive, but this is a soft way for you to be able to look at any ticker. Now, notice that the P to E is still here at 31 because the stock is earning what? $9 even in EPS. So they're earning $9 when you look at TSM. Now, this is a 1.16 trillion company. So this is a $1 trillion market cap company now due to the run up that is taking place and happen. Now, how many shares outstanding does TSM have? Well, they have 5.19 billion. We quantify that as a higher float. Now, this is a company that has 2.75 trillion in cash. So are we really worried about TSMC? No. Now they do have 956 billion in debt, but they have 3 times the amount of cash comparable to their debt. So we understand at the end of the day, they could go ahead and walk away, right, and be a-okay if a storm comes. They're also a company that did 3.63 trillion in revenue with an EBITDA of 2.49 trillion, with a net income of 1.57 trillion. This is bananas. So with TSMC, right, TSM, this is why a stock like this won't stay down long. Because this business, how many stocks can we find? Very few meta platforms, right? How many stocks can we find that can go and double relatively quickly and still pretty much stay at a fair price from a valuation perspective? So just let that seep into your mind. When we were down here, this stock had a P to E ratio, less than 20. All right. So you think about that. A lot of times your really great buys are businesses that have incredible growth perspective, but the price is very fair. So I do think that is something super, super duper important for us to take note of and to look at, right? Is that this is a pretty much a fair company and a fair price to pay for this business, right? So this is a fair price for you to pay for this business. So trading, here on TradingView, we see nothing but higher highs and higher lows. So this was the best price that you were going to get. Well, now let's talk worst case scenarios, right? Like TSM, let's say it does pull back below 277, 274, right? This is why level setting is super important. When you have levels on your chart, now you understand, where did the buyer step back in? The buyer stepped in here, right here at that level too. I can't make it up. It's right here on the chart, right? It stepped right back in. Buyers stepped in the same spot they did on the 13th of October, 10th of October, excuse me, right? 13th of October, right? And then right here, they stepped right here on the 7th and the 8th, right there on TSM in a falling wedge pattern. Need a crack back over 296, right? And now TSM could be back on the up and up if things stay strong within the market, right? If this rally, now the main question is, does this rally hold? Like I said before, yesterday, ink needs to dry on the paperwork. If ink don't dry on the paperwork, right, that is what it takes, right? That's what it takes for this market to hold these gains. Ink got to dry on the paperwork. So until ink finishes drying on the paperwork, you're not going to see this market hold its gains. Next question I got it last night, so let me answer it now. Dexcom, let me give you guys my thoughts on Dexcom. Bear flag pattern, as you see charted right here, to perfection. So the bear flag pattern played out pretty much perfectly here on Dex. But let's talk levels and numbers. Let's talk valuation. Let's talk business, right? Because we talked technicals there. That was a weekly bear flag, which we understand is a macro pattern, right? So that's a macro pattern, macro level time frame. Let's talk stats because our good friend Mandy asked a good question. Let's go ahead and cover it here on this Zoom for the Queen, right? So we appreciate you, right? 26 billion market cap, 46 trailing PDE. Let's talk numbers and facts. And I see you start this joint over. Welcome in to everybody who's just coming in, joining us. Make sure you guys, this call is being recorded. Make sure you guys go ahead and take your notes and we're ready to deliver for you. So we do have underneath 500 million shares outstanding here for DEX. So we do understand it's a low floater. So we get that off rip. We understand they have 3.2 billion in cash, 2.5 billion in debt. They have a revenue of 4.5 billion, right? So that's not bad. EBITDA, earnings before taxes and depreciation and amortization, yes, 1 billion, right? A quarterly earnings growth of 110%. So quarterly earnings growth Y over Y, which what means year over year. This is a stock that actually has a quarterly earnings growth of 110%. They're kind of falling within that window of, okay, this is a business that also as well, when you take a look at the summary, a quick summary, $1.80 EPS. This was just to what I just described, right? A stock that may be falling and its P to E is dipping, but the company is profitable. So let's talk numbers and facts. Let's go to this monthly time frame and highlight where this stock price could be on the way to and what's some good value area to really get. Now, there's a huge demand level at $25.82. Now, I don't know if we get all the way down there, but breaking down between this bear flag, I would say that you would like, this should be a name actively. If this is a name you're interested in owning as you continue to do a deep dive, I don't think this would be a bad name to own at $25 or $35, right? So what strategy could you employ to potentially get yourself into a position? Well, at 25 or $35, it'll cost you 2,500 or $3,500 for 100 shares. So you could decide and say, hey, that's my price. That's the level that I want to get exposed to. You could sell some cash secured puts for maybe $35 strikes, $25 strikes. Now, you probably wouldn't collect as much money just because those are so far out the money. But push come to shove, if you wanted to throw your wrench at it, that could be a strategy that you could employ. I think that this is a business right here, right now. Ideally, I'm looking at a level here from March of 2020. I know there was some liquidity there. Let me go back here just to see how things played out. This is what you do. So here, yeah, back in March of 2020, this was the actually bounce area. So it's shown some promise at 45 here 6 years ago now. So Dexcom at that 45, I do think it'll probably be some liquidity there to go ahead and grab it. You know, you might be looking, but I think 25 is the best price on this. Once again, you don't always get best prices. I think somewhere in between that 35, 45 range, you probably just wouldn't ignore it and you would probably take your shot at it and take a crack. So that's my thoughts with Dexcom. Valuable, pretty valuable business here. Not bad. Quarterly earnings growth of 110% Y over Y. This is a stock that's suffering a little bit here sentiment wise. So that's my thoughts on Dexcom. Like I said, if you could get it at like 35, I think that'd be pretty smooth. 45 would not be an overpay, though. I do want to say that 45 would not be an overpay. So let's see what happens. I think very well if it gets below that $50 mark, be on the way there. So those are my thoughts. That's how you evaluate a business, right? Soft launching, doing that. So now you understand exactly what you would be putting your money into. So is this stock falling, to answer the question? Correct. But is this business from a valuation perspective increasing? Yes. The value that you're getting is you're going to get a payoff a bit more, right? So to me, once again, the price at which you pay is very, very, very important for this business. So to me, this is a good grab around 35, 45. 25 would be perfect price. You would just put an order in, you would close your joint up, and you just wouldn't even look back until your alert started going off on it, right? You wouldn't lose sleep if you got it at $25. You would say, you know what? I got it at a favorable price. Let's just allow time to do what it does and reward us. So that's my thoughts on Dexcom. And that's how I would want to go over the ticker, right? To make sure that you understand exactly what we're looking at, right? So there you have that on Dexcom. So now I want everyone to pull up this next ticker, and it's going to be, sometimes it rains. For some areas, it's about to start snowing. So I want you to go ahead and put up Snowflake on the board. And Snowflake is on the board on the docket here right now. So I want you to pull it up. Ticker SNO, right? So we talked about MU. I want to give Snowflake their flowers. I like examining tickers that show me a bit of relative strength. Now, did they drop last week? Of course. What ticker, for the most part, didn't drop outside of a JPM and a few of these other names, like Eli Lilly, etc. And MU, Micron, didn't really drop that much. They were making 52-week highs, and they made another one today. Right. So when you take a look here, what I would say with Snowflake is two things. Let's talk about Snowflake as a company and what they must do in 2026. So ticker SNOW, which is up 100% from when I recommended it, pretty much almost at 140. Synonymously, there was documents countless of times I recommended Snowflake when no one was talking about it. So I can cover Snowflake at any given time that I feel as if I want to. Now, Snowflake is lacking in the trailing PE. They don't have it. They don't have any trailing PE because they're not profitable. Now, there's a forward PE here currently right now of 151. Now, that's still expensive. So understand with Snowflake, what business are you looking at right now? This is a low floater. We get that. 338 million shares. So this is a low floater, less than 500 million. But is the story written all together? No. Not with this, a blank quarterly earnings growth. So there's some things that are dramatically missing here. Now, I want to say this about Snow. At these levels, right, these are breakout levels, right? So what do I mean by that? Because Snowflake has not been up here since February of 2022, we're going on basically a 4-year hiatus since Snowflake has made it up to these levels. So Snowflake is far and few behind, right? Far and few behind, right? And when you look at Snowflake, right, it is super, 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 super duper important to highlight that there's a move up to the upside where Snowflake cracks and busts through 278. This could be a stock on the way to making a 300 campaign realistically. Now, the numbers and the fundamentals here don't look the best, but it starts with FY 2026. They can clean up themselves. They can come in here and they can get right and they can push themselves back to the upside. So when you take a look at Snowflake, this is a business that's losing negative $4.13 EPS. So this is all hype, no facts, right? So Snowflake has all the hype baked into it, not really moving off of facts. It's a lot of fiction here, and it's a lot of belief that Snowflake can become that. So now you understand the DNA of what you're actually putting your money into. So would Snowflake be a buy here today? No. Now, would Snowflake be a stock that you could trade? Yes. Let's say Snowflake, best case scenario for them right now, it cracks over this 278. I mean, I'm looking at Snowflake, and there's not because of price, being this stock being relatively new, didn't really have a lot of defined levels the first go round, right? I want to actually really look and sit here and monitor and watch two things on Snow. That 290 area is very intriguing. It's a lot of jumbled up price action because Snowflake hung out here a couple of times in between 278 and 290. So what I would say is on Snow, watch the $290 level over 278. Now, it's only if you get a clean break. Snowflake has the ability to kind of jumble up your price action. So this is not a clean trade and ticker. There's no clean breakout moves that tend to happen with this. Usually price action is jumbled up and we start to just trade sideways for a little bit before we end up breaking higher. So that's my thoughts with Snow. If you own this ticker and you say, hey, the company is not matching, what I'm looking for, I think it's time to hit the sell button. If the company does not match what you're thinking, I think it's time for you to hit the sell button. So those are my thoughts with this specific name here right now. All right. So Snowflake, not a bad company, but just understand what you have your money into if you're trading or if you are invested in Snowflake. Push come to shove. If we do see a major pullback, Snowflake can get cooked. Next ticker to talk about is we're going to talk about CEG. I waited till this morning to talk about CEG, and that's fine. So CEG been getting sold off here since the 29th. So I wanted to make mention of it. CEG is in a falling wedge pattern. Right now, it's dropped from about 404. So CEG, everyone pull up CEG. And then I also want you to pull up, if you have the capabilities to go dual screen, I want you to pull up VST. So we're going to talk VST, Vistra Corp here this morning, right? So two things that I want to put together. So CEG is more to define. Hold on one second. Oops. You know what? Let me come here and put this on this daily time frame. Last time it had a falling wedge pattern, you see what happened. Cracked up $50. But what I wanted to do is I wanted to show you this. I want to show you VST. Vistra Corp has a weekly bull flag. So I want to put both of these tickers up together. So we got a weekly bull flag that's still imminent here on ticker VST. So this is the weekly time frame. Is this macro or micro? This is macro. So VST has a macro level time frame potential breakout here of a bull what? A bull flag. So the crack opened over the top of 218. Now is VST a heavily traded ticker volume-wise? No. And let me show you why. VST, let's go to it. Pull up. You got to know your DNA. Know your DNA. Average volume of 4.4. That's nothing. We got companies that trade that within 30 minutes, sometimes 15. But let's talk numbers and facts. What's this number here? 338, low floater. VST, quarterly earnings growth, negative 65% year over year. So the numbers are not numbering right now. Total cash, 620 million, debt, 17 billion. So this is a fundamentally sound, not with a revenue growth here down. So this is why I stuck within this flag. So I wanted to point this out because this was a ticker I was asked about. And so until VST can show signs of growth, they're not cracking this 218 right now to break out to the upside, right? Until they kind of can show. Now, we see a lot of market cap was added since April. It's off of hype, not facts. So VST, what's going to happen if it breaks this 176? Breaks 176 is going to start coming to the downside. So I want you guys to take these notes on this. 176 is going to come to 160. After that, if we break there, you'll be dropping down to 149.86, essentially 150. I want you guys to look at those levels here. So the bottom of this this bull flag is where you should be highlighting and really looking at and paying attention to. So that's the bottom. The top level of this thing is 218. 218. All right. So it's make or break time. Do they break to the downside here? Right. We just seen a pop. But now let's zoom in. If you're looking at more maybe a shorter term type thing, you could be looking at, we'll pull a diagonal trend line here. We'll take the peak point and boom, we'll take it. And this is why VST, very similar, right? VST could in the short run be on a run back to 200 or 205. So that's what we have for them. Now let's come here to CEG, Constellation Energy Corporation, right? So now let's talk numbers and facts. CEG is breaking out of what? A falling wedge pattern. So what's the next levels here at 365 here in the pre-market? What's the next levels? 376.78, 387, right there. Boom. What happened last time it broke out of a falling wedge? It popped, it cracked, it went back to $400 a share. So you could be having a move of anywhere between $25 to $35 crack back here on CEG breaking out of this falling wedge. So CEG, once again, we gave you guys the coverage on CEG, and as well, we gave you the cover on VST, right? So you got two areas right there for the pickings right now, all right? So those are my thoughts there. Next stock to talk, let's talk Meta Platforms, 633 here in the pre-market. Nothing to really be excited about here now. But what you need to focus on is we did have a bullish hammer candle right here where buyer stepped right there in at 600. So now you're looking at a stock that's back here to 633. What's the level you got to crack and break? 660. All this is fun and games until it cracks 660. So you got to see this move, right, for us to crack 660, y'all. 660 is your big boy level here. And Meta Platforms could make that up relatively quickly, but it takes the right volume. Now, if Meta don't crack 660 and get back over 651 and crack 660, it could just stay range bound and just hang out here and chill. Now, below $600, you got defined levels that are here on this chart. Take notes on them. So now you look here at Meta Platforms. These are levels right here. These are all your key levels underneath $600 a share. So what I would do, I would take notes on them. I would jot them down. I'll make sure I have them set. And then boom, there you go. Because where did buyers step right in? Right there at a level that was already defined on this chart. So this is why you need levels, especially if you're looking long-term investing or trading. Doesn't matter. You need to have key levels available to be able to see these things crystal clear, right? So that's my thoughts on Meta Platforms, right? We'll see 660. Unless 660 is cracking, this thing ain't going back up all the way yet, right? So 660 could take us back to 710, right? So we got to see a creation of what? Higher highs and higher lows. We've made lower lows and lower highs. Well, let's keep the party rolling. Let's come to ticker MSTR. And that's pretty much MicroStrategy, right? So auto fit this to screen. There we go. So what pattern you have building here on MSTR? Well, got a falling wedge pattern. What's the most common chart pattern? Rising wedges and falling wedges just in general. Well, boom, you're cracking here at 247, but you need the volume to stay strong. What only did we recommend for people to start looking to go ahead and take a shot at? Hey, some shots you miss 100% of the shots you don't take. MSTU, right? So when you take a look here, there we go. MSTU, same thing, is dropped in this falling wedge from $6 to $2 right here. So what did we say was the buy zone for MSTU? Not last week, not the week before that, but 2 months ago and 3 months ago. MSTU, when it was at 6.7 and people asked, I said $2 to $2.50. That's where we're going to look to get it. And this is where, lo and behold, this is where exactly where it came to, right? So the worst case scenario for MSTU played out. Now, also, what was this? This was a weekly demand level. So we got to keep in mind that this since February, March, right? Price was coming down, came here at 226 and reverse. Well, magically, where did price come here on Friday? Where did the buyers step in? It was here at 220. By the time we ended up closing the day, we were already pushing back up here, right, at 237. So you had a $17 move in total. Now from the low of Friday, you've had a $30 move. Now, what can keep us holding? Well, we understand when BTC gets running, that MicroStrategy tends to follow, right? Because what? MicroStrategy is a business that is purely based upon speculation and holding Bitcoin. So what do we need to see from Bitcoin, ticker BTC? What we need to see is Bitcoin be able to stay above 100K. That's what we need to see. Well, what did I put here on this chart? I said this diagonal trend line, this would be the same place where buyers stepped in last time in April. This is where Bitcoin was coming, right here, the same point. So Bitcoin since September of 24 has not directly inverted this diagonal trend line. Look to the tick, to the tick, to the tick. Right here, April 7th, cracked right here at 75K. Busted its head and went all the way to 125K. Where was it starting to knock at? It was saying, we hitting 100K, and what did they do? Bitcoin's 100,000, Bitcoin's 100,000, Bitcoin's 100,000. They were trying to capitulate people. It didn't work so far, right? So now you understand if Bitcoin breaks through 100K, Bitcoin has the opportunity to come down here to 90,000, 85,000. I'm going to say it loud on this Zoom, and I'm going to say it loud so everybody can hear me. There will never be a Bitcoin that breaks below 50,000 ever again. 50,000 ever again will never happen. Never happen and get below 50K again. 60 may be possible. And that's just if we capitulate here at 70K and price will drop down very quickly because of liquidations. But 50K, you might as well just kiss it goodbye because it ain't happening. It's not happening. And if it gets down there, there would be so much liquidity here at 56 and 64,000 that'll shoot this thing right back up in the 70s. So I'm going to tell you here now, the best thing you're going to get with Bitcoin is maybe 70K and maybe 60K if you're quick enough, if those things ever arise. But until then, you might as well kiss 50K goodbye because it ain't happening and it's not coming. And so I'll tell you guys here again, BTC, when you take a look at this asset, you are not going to see underneath 50K ever again. Ever again. You may get 60 off the strength that 70 cracked and broke through, but it will just be for a short period of time. That's what you call value information. What do we look at? What are we looking at? We're looking at not just pricing structure, but we also consider how much inflows that we've had in BTC. So this is what I say. When I'm talking about something and I say it 5 times, take notes on it because we're going to come back to it here in a second. Everyone pull up ETH. That's what I want you to do right now. Ethereum USD. So now what I want you to do is I want you to pull up ETH on the other side and replace MicroStrategy. I want you to pull up ETH and Ethereum US dollar. So like we said, what's the best price scenario for ETH? 1,700 to 2,200. That's the best price you're going to get on it. So best price you're going to get on it. Is it likely to happen right now? No. But let me show you how it could happen. Right? So now you follow this and say, well, shoot, we just marked off the low of April 7th. We see ETH was getting tested here at 2150. It popped. Where did ETH just bounce at? I'm sorry, I'm not making it up. We just following the charts. Where did the liquidity step in? Right here to the tick. Right here in a 4-hour candle, right there on Tuesday, November 4th, right? Look at that. Let's go here to the hour just to show you just how much liquidity came in. They couldn't even keep it here. So boom, pop right there. Pop right there. Up $500 since then. Cool, but that's in the short term. But let's talk levels and facts. The longer that ETH doesn't go over 4,500, the easier by the time December comes, if they're right here in January and they're in the same spot and they break down, you will see selling. So keep that in mind that your dates are at the bottom. So when you're looking at ETH, what I'll tell you guys here is it comes down to this. We know what runs. I don't care what XRP boys got to say. I don't care about. We know what runs crypto. It's BTC. I don't want to hear about XRP because XRP is still in the hole and it's still not higher. And I'll debate this with anybody. XRP is still not higher than where it was at when I was still a boy in college. So let's just talk numbers and facts. XRP is still not higher. Oops, let me go here. XRP, you see they taking things off. Let me get a full XRP chart. That's how much I don't even look at the garbage. Hold on 1 second. Get a full XRP chart real quick. There we go. There we go. Full XRP chart. Oh, not a market cap chart. Apologies on that. And get an XRP, USD. There we go. All right, cool. So here we go. XRP chart. Like I said, I know what I'm talking about here. So this is 2018. Where is XRP at today? $2.53. Where was XRP at in January 2018? $3.20. What are we talking about? Where was Bitcoin at? Let me not pull that thing up, but I'm going to do it. I'm going to do it. The conversations can stop. We're going to put enough of this bad education that's out here tricking people into believing foolish nonsense and a bunch of nothing. Where was BTC at in 2018? Pull up both of these charts. Debate ended. We're not talking no more. 20,000. I got two charts next to me. Which one is higher? Well, last time I checked, Bitcoin had 100K, so that's a 5X. XRP is where? Toilet bowl. Right here, early 2018. What are we debating for? So the debate is ended. Let's stop talking about it. All of this stuff. This is running this market. This is fake and fictitious. This is fake and fictitious. Yes, if you got it at 50 cents, you made some money. But we know what runs this market. This was at 20K and it capitulated and it dropped down to 3,500 right here. Like I know this thing like the back of my hand, Jerome Powell standing at the desk, stuttering and all of that right here, right now. And then asset prices surged in 2019 again, and Bitcoin came back here to 13K. And me and Dennis was sitting in the dorm room watching it. Then boom, Bitcoin came and cracked over that 13K. And then boom, shot up here to this upside all the way at 65K. Drew down, right? Drew down to 30,000. Then shot back up 67,000. Dropped down to about 16, 15K. Then shot back up here to 75,000 here in March of 2024. So now we look here and we talk about levels and facts. Where is Bitcoin coming? When is Bitcoin coming down this low again? When is it getting this low? Maybe, but it has to break this trend. So if this trend gets broken and we start making lower lows and lower highs, then yes, these levels can start to be seen. But 50K underneath of Bitcoin, underneath 50K, that ain't happening. And if it does, I'll just be wrong on that. But I'm going to be loud about it here now. It won't happen. So you could take your crack if this thing busts down and cracks here at 70, gets here to 60, but 50K, too much education now, because there's a difference between Bitcoin in 2018. They were telling people to stay away from it because they were buying it. They were buying Bitcoin. They were telling Jamie Dimon said Bitcoin's a scam. But meanwhile, JP Morgan was backing up the Brinks truck and dropping their bags in there. XRP is trash. I don't want to hear about it. $2.50. You're not even higher than where you were at in 2018. BTC was 20K and drew down to 3,500. So now we're sitting here at 100K. What's the debates about? Debate closed and ended. XRP boys is just like the 250 boys. Because remember, Bitcoin was supposed to go to 250. Remember that. Bitcoin was supposed to go to 250 by the middle of this damn year. It ain't at 250. What did I say? And we'll pull the tape because that's what I'm going to start doing because we got guys who think Palantir was called something. You serious? Palantir, we called it at $20, $15. It was a top ad. Did we highlight that they needed to look to become profitable? You're right, we did. But we also highlighted that the ARK ETF, which lost a lot of people money, by the way. The ARK ETF was the #1 recommended buy here in this community. No one talked about ARK as much as me. I had to always give a disclaimer before I mentioned ARK to tell people, yo, I understand that ARK, this and that, but I always had to give disclaimers on ARK because people's like, yo, he talking about Kathy Woods. What you mean? You talk about Kathy Woods. You know what? People was riding Kathy Woods, and that's just the thing. I got ultimate respect for her. They was riding her to the upside when she was winning. But when she started losing, people started dissing her. But that's what happens, right? Boom. She started losing here in the short term, but now she back winning. They back riding her coattails. What you think we should be looking to do? This thing don't crack 90. I don't know how much I like it like that. I think that you should be taking profit on something that's frothy and frivolous, right? So let's talk. Let's talk it. What's here in the ARK ETF? Let's go back to the metrics, because at the end of the day, there was a lot of people trashing Kathy, say she wouldn't be successful, all of this stuff. At the end of the day, she's managing billions. So if you're not managing billions, you can't talk about somebody else like that. You get what I'm saying? You calling her trash and say her ETF trash. Her ETF outperformed the S&P 500 this year. So we're gonna start putting respect on people's names that's eating and doing things right. Because you take a look here, the S&P 500, Kathy Woods is outperforming it. Let's talk numbers and facts. S&P 500 opened where this year here in January? Right here. Let's talk numbers and facts. Right? So S&P 500 here, January 6th was 573. You do the math. You pull up a year-to-date chart and you take a look here at the ARK ETF and you hit YTD. Go hit YTD. It's up 42%, right? YTD. When you take a look at the S&P 500 and you hit year to date, it's up 14%. What are we talking about? She 3x what the SPY did this year off her ETF. Year to date, the SPY is up 14%. Very good percentage. The ARK ETF is up triple that. Let's put respect on her name. She earned it. But also, let's be mindful of what you got your money into if you hold an ARK. Let's talk numbers and facts. This is what you got your money into. Tesla, 12%. Elon just got his pay package approved. Let's see if he gets his ass in his office and starts working. He's been all this lollygagging, hanging around in the goulash, but now we got a motivated Elon ready to step into work. He talking about taking a company to 8.5 trillion. Let's go ahead and catch up to NVIDIA first, man, before you start talking 8.5 trillion. Let's catch up to NVIDIA first, bro, because there was a day and a time where Tesla was worth more than NVIDIA. That ain't the case. It takes about 2 to 3 Teslas now to actually build an NVIDIA, depending on what Elon's doing at the time. It could take 3 Teslas to make one NVIDIA, right? And so when you look here, you got Coinbase exposure. Roku, which we understand is a frivolous investment. CRISPR, which hasn't proven itself. Shopify, which we know to be sometimes lackluster. Tempest AI, which hasn't proven itself. Robinhood, which has had a good 18 months, but can they actually show us? Roblox, which has had a good 18 months, but can they show us? Palantir, which has had a great 2.5 years, but can they deliver? So what does that tell you? This ETF of the top 10, which make up 55%, the only way that this ETF is going to pile drive over 100, these companies got to deliver. FY 2026 needs to be deliverance. Otherwise, Tesla and Coinbase can't do it for you. Roku definitely can't do it for you, not at number 3. Why it's there, questionable. So this ETF has made it to its peak and its pinnacle unless these things can deliver. So you're hearing me say it now. I want to say it now. The ARK ETF has reached its pinnacle unless they can deliver, right? Unless these companies can deliver. The ARK has reached its pinnacle and ain't going back to 100 unless they can deliver on the numbers that they've been talking about. Palantir, you better deliver, because you already got a taste of it right now. You need to deliver on the numbers that they said they was going to deliver on. That's what it comes down to. So looking here, when you look at the ARK ETF, there is no $100 campaign unless, and I'm going to be loud about it, unless these stocks can deliver. Tesla, you're the leader. So you got to go above 500. Elon, stop running your mouth. You got your $1 trillion pay package. Now get to damn work. You got work to do. Shopify, listen, I like you and I appreciate you for everything you've done for me, but I know you and I know you to be exactly who I expect you to be. The company that'll get all the way here and wet the damn bed. So Shopify has not delivered on the numbers. Robinhood, listen, we understand where you can go. There's a two-part path. Robinhood could easily be at 200 or could easily go back to 60 or 70. Take your pill of poison. Robinhood, you're hearing it in here now. They could easily go either way, but it's incumbent upon how they deliver. How they deliver on these numbers. So pay attention. Now, Robinhood is probably one of the cleanest off this list as far as names that have been able to deliver. Now, you also have AMD. What's the path of taking AMD higher? No more just, oh, we got a deal here, we got a deal there. You got to actually put up the numbers. Listen, you're trading at a premium. Let me show you last time they traded at a premium, and it didn't end so well. Right here. So March of 2024, AMD was trading at a premium. They got some gaps on this chart now. So AMD got to show up. We ain't taking you up off of no BS deals no more. You see what happened to QCOM. You see what happened to QCOM. Notice people wasn't buying that for too long. And I smelt it and sniffed it right in the water. They tried to pull the stuff that everybody else pulled, but it ain't worked for you. Because people understand what's under the hood of you. And no knock to QCOM, I like you. But you tried to pull a fast one. Oh, we got to deal with OpenAI after everybody else was getting a deal. And you thought it was going to work, but it didn't. It backfired. It brought you right back to reality. Because this is the type of company that you are. You're more of a value name. You're not in a growth position. You're not an MU. You're not an NVIDIA. You're not a TSMC. We get it. We appreciate you trying. But this is what happens when people really start to sniff out and say, you know what? They're not going to be able to deliver on these numbers. And so QCOM got cooked. Fast came right back here to this downside. That's what happens, right? When you put out numbers, you say, oh, yeah, we just getting a deal with OpenAI. We just get a deal with OpenAI. That'll make it work. That's not how it's done here. Deals with OpenAI, they still got to amount to something. So that's what investors are going to say. Show me the money. Show me the money. Show me what you're earning. Show me. That's what it comes down to. Next thing, the quantum computing frenzy phase, IONQ, all of these names, right? Let's just talk numbers and facts. Do you think it's the best time to buy quantum? No. Is quantum going to really work? There's a strong chance. I think there's a lot of optimism, but what's the revenue profitability wise, right? Especially when these things are overran. So a couple of things that I want to make note of, right? Two things, right? Why do we always make the habit of wanting to be somebody else's exit liquidity? What do I mean by that? We wait until everybody's talking about a ticker to buy it. That's the time that you should be looking at, maybe add it to your list and say, you know what? These are some levels that I'm interested if price ever does get back down here. Why would you overpay for a business that don't actually even have earnings? Just think about that. There's businesses out here, right, where we don't even have positive earnings. Like when you think about IONQ, and no disrespect to them because Snowflake is in the same basket. But I just told you a little bit earlier about Snowflake and what they had to do. IONQ has earned negative $5.84 in the past 12 months. Why would you line up to buy something that's up 10x from September 2024 that can't show you jack? Just calling it what it is. But if we get these crazes and these frenzies, yo, I'm gonna buy this ticker. Yo, what you think about this ticker? What you think about this ticker? What you think about this ticker? And even a soft look, right? Even you looking at the ticker from a soft look perspective, you should be able to see directly, all right, that this ticker is trash. Like it's trash at the end of the day. So push come to shove, some market hit a rough time. What you think is going to be on the first on the chopping block? Your bad tickers, your unprofitable businesses. People don't let JPM go like that, but they sure as hell will let IONQ go like no tomorrow. They'll unload it and then drop it to the downside and they'll slaughter it. And it'll be back at 30. You blink twice. Next thing you know, it's at 20. And you're saying, what happened? And it's a roller coaster ride. What I will say about these tickers, they're very, very, very speculative. So in times when the market is really booming and they're quote unquote, I'm seeing, we're talking about people talking about the Fed. We got a Fed reserve interest rate decision. Now, when the Fed right? Let me just tell you, right? When the Fed is pulling back, right? When the Fed starts to pull back and go hawkish, that's where the market gets itself into trouble because it's overcompensating right now. What do I mean by that? Everyone wants these rate cuts, and the Fed has somewhat priced the rate cuts in. Oh, we're going to give y'all these rate cuts in the year. We're going to give you 3 next year. All of that stuff. When the Fed overcompensates and overpromises rate cuts, but then pulls back, investors don't like it. Particularly risky businesses tend to go up off of optimism of Fed in being able to increase money supply, but then as well draw back and drop rates. So that's what ends up happening. But we always wait until bad things happen to get prepared. So I'm gonna tell you here right now the price you want to get IONQ. And if it don't go there, don't get it because you got to understand that this is a business that's frothy. So I'm gonna say it here right now. The price that you want to grab IONQ ideally is you want to get this stock at about 15 bucks. I just said a 75% drawdown on somebody's favorite ticker. Someone might have just dropped to their knees in Walmart, right? So now let's talk about this. Set $15. You right. I want you to get this at $15. And if it don't come there, I don't want you to touch it. I want you to get it at 15. But L, what if it don't come down? Guess what? You be buying a falling knife anyway. So I could see this set up because why? With these companies, they got to come out and deliver on these earnings. Why am I paying for a ticker that's ran 100%, ran 600%, almost 1,000% at one point, right? At one point, it almost ran 1,000%, right? 600%. Why would I be paying for that ticker with no damn earnings? No earnings. Just think about that. No earnings. I would have people willing to buy IONQ before they was willing to buy MU. Crazy, right? Crazy, right? And I'm talking about before. It's in your best interest to pay for quality tickers. Don't just come in here and be buying a bunch of BS. Buying a bunch of BS. Pay for quality tickers, not just buying a bunch of BS. Focus on the business, not just the price. And I think that's where people get making these grave mistakes at is you focusing on just the price. So that's my thoughts with IONQ. Next ticker, Kava. The reason I keep mentioning this because Kava seemed to have been a hot commodity. Well, guess what? You got an opportunity to step into the fold, and you got an opportunity to get Kava at the price that we listed and wanted, 30 to 35 bucks. I want you to be putting that down. Kava boys got to eat, right? But here's the thing. Below that $40 mark, that's worth taking your crack if that's a business you want exposure into. If that's a business you want exposure, everybody wanted it at 120, 130. I could not talk about Kava, right? Because people was like, what you think about Kava? Well, now Kava's down here to get into the levels I highlighted long ago. So guess what? Coming down here to these levels, pick it up. Pick it up. Sell some cash secure puts for $35. Sell some cash secure puts for 40 bucks. Go ahead and pick your equity up. Right? If this is a name that you know you want it, go ahead and pick your equity up. That's where we have it at. Now let's talk some other things real quick. The VIX this week, VIX. Let's talk numbers and facts. The VIX, could it go back over 20? Yes, it could. Now, if that ends up coming back over 20, what's going to happen? The market's going to sell off again and go to 22. What's the magic number on the VIX? 25. Because if usually you get over 25, you kind of slingshot to 30. So if you are taking a look here, right, over 25 will be where extreme pain comes into the market. If we go back to 15, we'll cool off. Risky assets will likely run. Government shutdown, obviously at 15, will probably be ended. For sure. Not just speculation and, let the ink dry on the paperwork, right? Ink dries on the paperwork. You'll see the VIX around 15, 16, right? Ink dries on the paperwork, 15, 16. Some risky assets will probably run, maybe not all the way back to whatever they lost, but they'll probably go up definitely a little bit. So you do have, in my opinion, that's the setup there with the VIX, right? And what we're taking a look at and seeing here. Let's talk the Dow Jones Industrial Average. My favorite indice, to what some may not believe, but the Dow Jones Industrial Average is my favorite indice. It's not the NASDAQ. So the DIA, all right? So I'm a DIA guy, just like Cleve. I'm actually going to come over here and let me pull up the DIA. I want to put CAT, or let's talk about AXP. All right. So AXP, there we go. AXP is getting ready to make 52-week highs this week. So just listen up and watch out. AXP is getting ready to blow and bust past and head over to 370 range. So now you have here on the DIA index, you have a falling wedge pattern that took place, right? So from 480, which is 48,000, on the DIA, you have a falling wedge pattern. So we're going to break out here. So as long as the market can stay upright here on the DIA, we're looking actually pretty good. So I want you guys to put these notes down for yourself, right? For the DIA, get ready for us to crack back and bust over this all-time high. You know, if I'm talking DIA, you know exactly what ticker I'm looking at. Right now, Caterpillar and JPM are two of my favorite tickers. No knock to AXP. They do well. It's just not my favorite ticker. Right? United Health is a name that I do like, of course, too. We picked that name up at the bottom of the year, of course, as well. Right? So now, when we take a look here, we drew a diagonal trend line here from the low of the 14th. We bounced where? Right there at 464. So here on the DIA, a couple of things to make note of, right? So 480, which is equivalent to 48,000 points. So you got a falling wedge pattern. So we're expecting at least a 900-point move on the Dow if we can regain this 473, which is 47,300 points. So the DIA, right? I definitely, I definitely want to make sure, right, that we're able to help people understand two things, right? So for the DIA, when you pull up and you look at JPM last week, JPM is up about $1 here in the pre-market. 320 in play, right? 320s in play. You got a level here at 316.50. 320s in play this week still again. Last week, of course, we know what happened. There's no way it could have went to 320 with all the things, but it didn't fold and it didn't fall. So JPM, if the banks can become and continue to be strong and power its way up, you got JPM, just print money, and then you got Goldman Sachs, right? Which Goldman Sachs, if it can get above 798, all right, 798, that will push us up higher. On the downside levels, what are your downside levels here? Right. So I definitely need to make sure that you guys know a couple of things, right? 740, I want you to put that level on your chart. I also want you to put a level as well right here at about 757. I want you to put that level on your chart, 756, excuse me. Right. So I want you to have those levels defined clearly on your chart. So worst case scenarios, we break below 740, we come down to 727. JPM, right? Because Goldman Sachs is a bit of a bigger mover. 300, if 300 breaks on JPM, there will be pain in this market. So 740 for Goldman Sachs, 300 for JPM. If those levels get flushed, that's where the DIA will start to bleed out, and the Dow Jones Industrial Average will break below 45,000 points. So you're hearing me say it now. Worst case scenario, the Dow breaks below 45,000 points, which would be a $20 drop on the DIA. Upside perspective, we break through this falling wedge, JPM pushes, Goldman Sachs pushes, AXP pushes, right? And we see these names actually make more move, and the Dow Jones can get to 48K. Now you have your best case and your worst case scenario, right? Here playing out there, right? So 300, keep that in mind, 300. Now let's talk AXP, right? Breaking out of this bull flag pattern here. So it's a breakout of a bull flag from October 16th, right? So AXP is getting ready to head to, now think about this time of year. With all the things that are happening, government shutdown, holiday season getting ready to happen. What you think's about to occur? You think AXP gonna make a lot of money? You damn right. You think they're gonna make a lot of money off interest? You right. AXP $400 campaign begins. $400 is on the way. So I'm telling you here now, AXP $400 campaign has begun. So AXP $400 campaign has begun. It's right there for the pickings. You saw how fast Caterpillar, when these value stocks start to show you a little bit of growth and they start to show you they got a little bit of, I'm telling you. So $400 campaign is getting ready. So those are my thoughts here. All right. Those are my thoughts directly here. All right. At this time. So that is that. It's 7:37. We went through a multitude of things here this morning. We talked level setting. Let's talk QQQ as I get ready to wind this thing down. There's more than enough information here for everybody to be able to garner some good stuff. So you got the QQQ, which is here at 618. So it already hit the level. It hit the level that it broke last week that it flushed. So it did a V shape all the way, an 18-point move on the NASDAQ, on the QQQ ETF, 18 points, right? 18-point move. So now next questions and steps is, do we break back over 625 and 626 area and push towards 630? That's the next question of the hour, right? So we'll get the answer to that starting today. So on the downside action, unless we're getting below 600, I think we'll be all right, right? Like we'll be all right. We got to get below 600 on any downside. Also as well, when you are taking a look at the tickers, whether it's Microsoft, whether it's Apple has held really strong, which is good. You would need a combination of NVIDIA, Apple, and Microsoft really rolling over. You've only gotten NVIDIA and Microsoft to roll over pretty much a little, right? NVIDIA lost the most money market cap wise since the DeepSeek situation, but you got to put that into perspective. That was about a $600 to $700 billion wipe that we saw. So you think about that. Last week was a $600 to $700 billion wipe on NVIDIA. I mean, that was, that there's companies that's not even worth. I mean, you just put that into perspective. That was a Palantir that was wiped off the map, from NVIDIA last week. So that's how much equity that wiped off. And that's why the sell-off to me seemed deeper than what it was, because so much of the market is relying upon NVIDIA. When the number one ticker in two of the top three indices is moving like that, it's going to be hard for anything to run, right? So you got to look at the situation in the setup. It was an unfortunate one, right? So the VIX is here at 18. That's what we have there. I'll be a plethora of things that I'll push out and come out with. But that's really your notes for today. So make sure that you are tapped into classes this week. We will be live tomorrow, 9 a.m. to 12 p.m. So we will have live trading and coaching tomorrow, 9 a.m. to 12 p.m. And then on Wednesday will be 8 to 10 a.m. Any pop-ups that happen, you guys know we'll be abreast. This recording will come in directly and promptly right here in this recording tab. So we'll make sure the recording from last night, if you missed it, it's right there for you. You can check it out at your own time and convenience. But we're just going to wrap this thing up. We're going to keep working. One thing about me is we just going to work. We're going to outwork everything. You get what I'm saying? So I'm good. I know I get a lot of, I'm good. Just know I'm good. I'm ready to go. I'm fired up. One thing about me, just don't put a battery in my back because I'm already fired up enough. Now I'm fired up even more. So we here, locked and loaded. Let's make sure we're paying attention. Let's make sure we're taking these notes and make sure we're studying and taking time to run through things. That's what I got to say. A lot of the answers to your questions are right here on Zoom. So run these things back as much as you can because you got the ability to do that. Continue to show up, be locked in, and let's continue to get to it. This is what impact and value looks like. We wake up 6:30, we deliver a masterclass. If something happens in the market today that comes from left field, you're going to get a Zoom link and we come in and we deliver on it. We do make sure that we're putting all this information out here, but you got to show up and want it just as much as you say you do. If you don't want it like that, hey, that's on you. But a lot of people saying, yo, I want it, but I can't do everything for you. What I can do is show up consistently, win, lose, or draw, and be here to be a guide. When the market drop, I don't hide like the rest of these jokers. And yeah, I'm saying it today because I see people in comments every single day, y'all jocking people, but y'all not showing up 24/7 when y'all need to be showing up. But it's always somebody else's fault. But yo, I went to this and everybody says, yo, I get the most value, get the most value. Say that loud then. Don't say that quietly, say that loud. Because every single day, I ain't too hard to find. Just like Dion saying, I'm right here day by day. So show up. Let's put in the work. Let's show up and put in the work. Let's show up and put in the work. Let's be serious about it too. Let's not play around. Oh man, I paid such and such. I don't care. You didn't pay 15,000 to be here. You ain't pay 25,000 to be here and not get value. You get a list of bull. And yeah, I'm saying it because I'm gonna be loud about it. You ain't gonna discount me. Every single day I show up to deliver valuable information that if you follow, it's going to change things. If you follow, you can start to do things yourself. And it's enough proof in the pudding, enough proof in the pudding day by day. If you're looking at all of this information, you're here and you serious, you locked in, it's going to make sense. Does that mean you ain't going to take losses? No. I'm just the person that don't hide behind it. I'm just the person that come and be transparent. I don't sit and just play around with this thing. I don't sit and just joke around because it's not a joke. I don't sit and just talk to you and pull on your heartstrings. And yeah, I'm saying it. A lot of y'all listening, subscribing to things that people just pulling on your heartstrings, just trying to get the money up out your pocket. But I'm here teaching nonstop. If we ran how many classes I've run a year, it's over 365. So that means whatever you pay, you paying about $1 per class. And we running this thing lifetime. Ain't no re-up. Oh yeah, man. Well, we need to run up that subscription. Nah, ain't no re-up here. It's you come in, you get this value. You can come to Atlanta. We'll get busy January 11th to the 14th. We'll get busy. One thing I won't play with though is when I'm showing up nonstop, nonstop. And when my line is open, not to chit chat and to be friends, but to chit chat and actually talk about the market. Yo, L, what you think about this? Yo, L, blah, blah, blah. That's what you should be talking to me about. What's this ticker going to do and what you looking for? Other than that, that's what we should be talking about. We got times to chit chat and play around other times, but let's focus and lock in. Let's focus and lock in. Let's be serious about this information because it's 7:44 and we're done with this masterclass. We're done with this masterclass. This is a masterclass right now, but them jokers still sleep. But you still subscribe and you playing around. Oh, I was getting value. You pay for VIP. You ain't getting VIP. Don't be a fanboy. Don't be a fan person of these jokers. Come and get this information. Don't even be a fan of me. Come and get this information and lock in and be serious. We ain't got time to be playing around because our team is losing right now. What I care about making an all-star team with my team 13th in the standings? What I care about that? Because I'm taking an all-star? You think I want to be on an all-star team? No, I want to be on a winning team. So you need me to come in and start? I'll play the 3. You need me to come off the bench? I'm coming off the bench, 8th man, 7th man. What you need me to do? That's the mentality we all should have. We should be focused on, yo, how can we do this thing? Because we got some things that we got to overcome as a collective. And that's what got to happen. So that's my motivation. Put up or shut up. So now today, let's get busy. Rest of the week, let's get busy. Rest of this year, let's get busy. Yes, this thing comes with nicks, bruises, bumps, all of that. Anything good and great worth having, gotta come with it though. You don't just walk in and just walk into greatness. It comes with some nicks, some bumps, some setbacks. But on the other side of that is real success. Anything worth having and building is right there for the taking. But it's about our mindset, how we show up. So what I'm telling people here right now is continue to show up. Some things, unforeseen things will happen. Some wrenches will come in your way, but how you respond to those things will determine things for you. So I'm going to wrap this thing up here today. I appreciate everybody for their time. I will see everybody tomorrow. I'll be in the chat. I'll be off the grid for today. I'll be in the background, studying up, listening in, but we will be live on class again tomorrow. Everyone should have everything of what they need for today. And let's sit back and see this ink dry on this paperwork. Other than that, I appreciate you guys for your time. And let's keep this party rolling. Peace.